everyone. Today I just wanted to walk you through how to use the Advanced Deal Analysis tool. So you can find this tool under the Software tab and then selecting Advanced Deal Analysis. So the very first thing here that I just want to point out is you do have a borrower profile. I highly encourage you to always make sure that your borrower profile is filled out and up to date, as this can affect your points and interest. And then the very next thing here is you are going to need either a zip code or a full property address. So for today, I'm just going to use this example here. And then down here, you need to fill out three things. You're going to need to do the projected purchase price, the repair cost estimate, and then the after repair value. And once you have those three things in place there, what you're going to do is you're going to click on calculate, and this is going to break down everything that we want to know about the deal financially. So my biggest advice here is just always wait for these funding options tab to load before you scroll all the way down. So as you can see here, we have A5, B5, and C5. So one thing to keep in mind with this is A5, we can lend up to 70% of the after repair value. B5, we can lend up to 72%. And C5, we can lend up to the full 74% of the after repair value. Some things to keep in mind with this is you've got different cash to close options, as well as different estimated net profits. So let's say, for an example, for today, you guys wanted to select the zero cash to close option, which would be C5. What I'm going to do is I'm going to select C5, and once I select that funding option, it is then going to pull down here. So as you guys can see right here, we've got zero cash to close. That means that you guys would have no money out of pocket needed upon closing. Another thing to keep in mind is you have the max funding amount. So this is going to show you the exact 74% of that after repair value that we can lend up to. And then if we head over here, you have the entire capital needed for the deal. So in the capital needed for the deal, this is going to include your interest, origination, and all of your closing costs, as well as your purchase price and your repair cost estimate. So with this here, you'll want to make sure that the capital needed for the deal is always the same or below the max funding available in order to be at that 100% financing. Another thing that you're seeing here is this number in green. If you just hover over this question mark here, it is just pretty much stating that if you were to put $1 into a rehab, you could expect anywhere from $1.32 to $3.89 back on your return, and that is 80% of all of our profitable deals. When you jump into that medium range and that high range, it becomes a lot more risky. So just always make sure that you are in that green range as far as that rehab budget goes for the after repair value that you're hoping to get. Another thing that you're seeing down here is we have an estimated cost for agent commission. This calculator here does calculate about 6% as far as the sell of your property. Down here we've got holding costs. This is in regards to utility costs. Keep in mind this is just an estimate. We have inspection costs. This is in regards to our termite inspection, which we do require on any property that we lend on. Again, this is just an estimate. And then we've got valuation costs. This here is in regards to our desktop evaluation as well as our appraisal. And then down here is your estimated net profit. So this is what you would walk away with from the deal after everything is paid out. This is what you would walk away with.